Welcome, everybody, to Mortgages with Millennials. I'm your host, Robbie Chrisman. We're joined this month by Matthew VanFossen and Larry Bailey, who we'll get to both of them in a minute. They will have a lot more prescient and informative things to say than me about the POS space. It should be a really good show. I'm excited. We'll talk kind of the future of POS and what originators can expect and how it'll help them, how it'll help customers, just the overall user experience of the process. But before I do that, I do want to say a big thank you to Tidal Wave for sponsoring Mortgages with Millennials. They are, and Matthew, please do not correct this because I know this to be true, the only agentic AI mortgage POS plus. Simplify the borrower application, eliminate mundane processes, achieve perfect data quality. Visit tidalwave.ai. And in fact, Matthew, that's probably good. I like that you have, Larry and I have sponsor appropriate backgrounds, Tidal Wave. Thank you, Tidal Wave. You have Humble. Humble is one of your things that people associate with you, or it's something you're working towards. Can you fill people in?
Well, actually, it says stay hungry, stay humble.
Well, so that's good that you've been humble. I'm hungry and I'm ready for lunch here in La Crosse, Wisconsin, which I should say, if any of our attendees,
I was just there. I was just in La Crosse last month.
I'd turn off my background, but I like my title background. Right here along the Mississippi River, kind of towards Minneapolis from Madison and Milwaukee. Larry, if you have a lunch recommendation or any of our attendees have one, shoot it to me, and I'd love to.
I went to a Mexican restaurant not far from the hotel, and it was okay.
Solid. I'm looking at a place called Cheeto Ramen, which I don't know about ramen.
I don't know about that.
Mississippi River.
Yeah, I'm sure it's fine.
Yeah.
If it had fish in the name along the river, because that river is gorgeous.
Yeah,
maybe that would be okay. But I don't know about ramen.
I enjoyed it. I drove down this morning from the Minneapolis suburbs along 61, the Great River Highway or whatever, and I didn't take Interstate 90 or 94, whatever that is. I tried to get off the interstates and see America a little bit. So I'm enjoying being here. There was a crazy tornado warning and sirens last night in Minneapolis, and it's sheets of rain and like the furniture was all blown around and trees down in the parking lot. So, but it knocked the heat out of the sky. So it's a very, very pleasant day here in the Midwest. Matthew, where are you joining us from?
I'm just outside of New York City in Edgewater, New Jersey today.
There you go. And Larry, where are you calling in from?
I am in a place called Hainesport, New Jersey, which is about 30 minutes just east of Philadelphia. So Matt and I are in the same state, he's in the north part, I'm in the south part.
There you go. Well, let's get into it a little bit. Like I said, I want to talk point of sale today, and I'd like to have Matt, I want to have you introduce yourself, and then also kind of why we have Larry here as well, because Larry's like the Encompass whisperer from everything I've heard, but you can probably put it more eloquently than me. So maybe a little introduction about yourself, and then what you know to be true about Larry.
Well, yeah, thank you, Robbie. Always appreciate you having me on and coming back and doing these deep dive conversations. I'm Matt VanFossen. I've been a lender for the past 20 years, and for the past 5 years, I've been wearing a double hat inside of the vendor space, and I created a product called the Big POS. And I created it because I wanted more control over the borrower and loan officer experiences and make them more mobile.
And when it comes to why we have Larry, here you personally recommended Larry. Your interactions with him in the past,
So Larry is an amazing individual. The first interactions I had with Larry were probably over a decade ago, and he had this thing called Encompass Basecamp, and it was just awesome. He was always recognized in the at the time Ellie Mae community as the leading expert as an Encompass admin for configuration in the industry, and he's always helped me a lot with my business over at Absolute, pushing the limits of Encompass, the LOS, and when it comes to the point of sale space, he is front row and center with his clients on figuring out how to get workflows between point of sale and LOS technology to seamlessly talk, and getting them set up and configured the right way to get it actually what the clients look to do. So I thought he was the perfect person to bring on to kind of have a well-diversified opinion on the different point of sale offerings, the legacy systems, the newer ones in the market, and how lenders are using to incorporate it into their LOS strategy, because they go hand in hand together, front end and back end.
Very cool. Thank you for that. As people that are consistent viewers of the show know, it's more, mortgages with millennials. It's about how we can cater to the next generation of home ownership and that sort of thing. And Larry, I want to get your perspective on the ways that the POS space is evolving to meet the needs of the modern consumer. And maybe you can kind of take us through a history lesson of Encompass and what it used to be and where we are today, and kind of where companies should strive to be headed to really cater to the user experience.
Yeah. So I'm a little bit older than Matt. So I started lending in '93 when we still had thermal fax machines and typewriters. But when we started getting into some heavy stuff, like LendingTree was the original aggregator for leads, if you don't count newspaper. And so for me, what I've been watching over the time, especially with newer generations coming to market and trying to figure out who to do business with, it's bifurcated from what we see. We have some companies that are still hanging on to CRM-esque experiences, and then others that are really positioning towards borrower experience and really giving those consumers information where they are. And I think that's kind of where I think a lot of folks, I know I see it when we do workflow reviews and propose, how companies leverage what vendor they're using or what vendor they might want to think about using. Those are the things that we hear, Robbie. So it's not a straightforward line. It's very dependent upon the audience and the teams that are using the technology at the lender.
To kind of set the stage, because I think a good chunk of people watching this show are in the origination space, or they are originators. When it comes to, what can a POS do for you? Can you speak a little bit to the importance of Larry first and then Matt second? Because Matt, I know you created a POS for this reason, but like what a POS can do for you and the difference a good one can make, and how originators should be utilizing it to maximize its potential.
Yeah, it's a great question. So for me, again, if anybody knows anything about me, it's workflow before tech. So again, this answer is going to be a little bit, I'm going to put it maybe in like 2 or 3 spots for you, Robbie. The first thing is on the POS side, or that experience side, the tech that they're choosing is a lot of times just to take the ease of applying. And, it's kind of like, for me, it's kind of like the rocket mode, right? Push button, get mortgage, brilliant marketing thing. And the idea was that when we go through, what's the simplest way to get the application? And then on the other end of that spectrum, it's, okay, well, we got the application. Now, what do we want to have automatically happen so that we don't have to have the borrower wait for the next piece of information or the next direction? And that's where it's really, really interesting with what companies are doing with their native settings, and then how companies are leveraging Encompass settings to really advance that path, that workflow forward. So yeah, we're getting into some really cool stuff. We had some meetings earlier today, even with companies trying to figure out with, one technology vendor versus another, and how much can they actually leverage native Encompass to accomplish the experience that they want for the borrowers. It's getting very, very interesting, depending on what tech the POS is based on.
Matt, anything to add? I know you, I'm assuming your reasoning for creating a POS system was dissatisfaction with some of the legacy offerings out there.
Well, it really came down to a vision standpoint of that we all, as leaders in the mortgage industry, we all do the same thing. We all take mortgage applications, get referrals, buy leads, take those into our loan officers, manufacture them, and get them to the closing table. Maybe some take them down for servicing, some take them down for to sell them off to a takeout. But we all do it a little bit differently. And my big problem that I saw was that when you look at a point of sale, it's the lifeblood of your business. Your loan officer lives inside of it to take applications. Your customers use it to take and track applications. Your referral partners use it to refer in applications and track the status. So it's literally all 3 of the mortgage company's customers are living and dying by this system. And what I saw was, well, I should be in control of it as the chief executive of a lender. I should be able to choose what questions I want to ask and when, what services I want to run and when, and I should be able to fork that intellectual property I put inside the system. So if I want to bifurcate my workflow, or if I want to put a custom question in, that should be my ownership of that IP because I created the idea to do it. I shouldn't have to go pay a third-party company to go build it and then share it with the rest of the client base. So my big thing was allowing lenders to self-customize their application process. A lot of what Larry's talking about what services they want to run, and make the system configurable just to their specific needs without releasing that IP to the rest of the mortgage companies that are on the platform.
Yeah. So I want to focus on workflow here for a minute and kind of where the industry is headed, because I've heard things like, workflow before technology. Well, I'm saying, what can we get that used to be later in the process before or earlier in the process? And I've heard, maybe title or insurance earlier in the process, maybe some of the underwriting stuff at the point of search. How can we talk just, and we can get technical, Larry, but some of the mechanics of getting these things further toward the start of the process where, we have a much better idea of how we want to lend to a consumer before they start going down this road of, now it's costing the company money in various ways. And then we get a decline or have to, slough them off for some other reason.
So, it's one of those things where when I work with lenders, a lot of times they're looking for reasons to make a change because they're trying to save money, right? Or maybe make some money in ways they hadn't before. So I'll get into loan level accounting and how many times are they paying for services that are just that those deals aren't closing. Maybe they're not even getting to an application. And so what I've been watching, especially over the last 18 months, is having lenders understand when to do an automated limited service. So like Matt and I, when we were at the ICE show earlier this year, he talked about automating soft pulls. Right. And so working through and doing an automated soft pull up front just to distinguish. We've got a client that we do that. They do a lot of builder referrals and we do the same thing. And this way it separates out the applications that have a chance versus those that probably don't. And then it focuses their work in. And so for me, the idea of again, this topic here of making sure we're getting the right professionals, the loan originators talking to the right borrowers at the right moment is running those services up front to make sure that we've got the software doing that segmentation and not the people, because we want to make sure our people are talking to the right folks at the right time. So, I'm an advocate to where you've got to be able to make sure that when you define that workflow as a business, what do you want to make sure is run before that loan officer, that human, gets a hold of the borrower, to make sure that connection can be made very quickly without asking too many redundant questions or information that the borrower maybe doesn't even have an answer to, but are very important to the conversation to give to the originator to make that conversation go better.
Yeah, Matt, thoughts on, the workflow you're striving for at Absolute, or kind of how you see it moving it toward the future? What does the future of mortgage workflow look like?
Sure. I'll take the question in two parts. One, you had mentioned moving things up in the process, things like title or insurance. And I think that's a very interesting segment, Robbie, just for the reason that I do see that we want more integrations with third parties like auto quoting insurance. When a customer uploads their HOI policy, sending it to a preferred insurance vendor automatically and allowing them to quote the insurance back to potentially get your customer a better deal, or maybe the mortgage company has some type of joint venture with an insurance company. We are seeing more and more of that happen. So I do think that the point of sale system is a vehicle to move these processes up, like you said earlier. Now, when it comes down to singular workflow, I'm going to build off of what Larry was saying earlier. We're looking at these automated decisioning systems. We know that the cost of FICO is through the roof, right? Credit reports are higher than they have ever been. Soft pull has been a way to bypass trigger leads. It's a little bit cheaper of a pull. You can do a single bureau soft pull. So what Larry was saying earlier, something that I'm leveraging is I do on every file an automated soft pull. And based on how that soft pull pulls down, what level that FICO score is, I can now choose to go and do other pay services to keep my costs down. Maybe if a FICO score comes back at a 500 on a soft pull, I don't want to offer verification of income and verification of assets tasks to that customer where I'm now racking up, additional $20, $30 on an initial file that's not going to go anywhere. I think that this is where the mixture between point of sale, how it talks to your LOS, and what services that you're actually connected into is really important. And what we made a decision to do early on was we only integrated with Encompass. Now that closed us off of 30% of the market. But rather than going wide, we decided to go very deep on a singular LOS. And what we said is we're going to go and do all the stuff on Encompass's next generation technology. It's called Encompass Partner Connect and their API. And rather than building all of this automation inside of the point of sale system, we're going to get ours to talk to the native Encompass automation system. And what that does is that unlocks all of this potential where we can work with partners like Larry's company, and they can jump right in, and without even knowing how to configure our software, it just automatically works with any pre-configurations that client already had. So you can do any level of variables. You can do credit score based, loan factoring based. You can put lockouts, Robbie, so you can say, if this happens, then we don't want that to happen. And that's all a big cost savings and a really good automation function.
Ian, I'm wondering how AI fits into this. Larry, the talk I think has evolved from, is AI going to take my job, to how can AI make me more efficient? How can I best utilize it to maximize my potential? And I think it's turned from kind of this doomsday fear thing into a little more excitement of like, holy smokes, there's so many ways that it can help that I'm freed up to move up the chain of tasks. I'd kind of do like a Maslow's hierarchy of needs. I can go from basic things up into more existential, like I'm doing more and more fulfilling stuff. How do you see AI fitting in to workflow, especially come to the POS space, but in general?
I think AI is an excellent tool for an analysis. If you asked me this question at the beginning of the year, or asked a room of folks, they would think like AI is going to imagine the perfect workflow, to which I just scoffed. I just laughed, because that's just not real. What is real is if you have a workflow to say, listen, we've got these files. What is the predictability of closing based upon the data that we have from our behaviors, POS or LOS, it doesn't matter. And let's use AI to do some analytics on what should we be doing at this moment, and what are some other possible outcomes that maybe we're not thinking of. So I think what companies are doing right now in this space on the POS space is doing a lot of predictability analytics on where should their teams be focusing their money based upon the past performance and current metrics that are out there that are consumable in the public space. But what it's not doing, there's no such thing as, oh, let me just type into ChatGPT to figure out how I should run my company. That's not a thing. And I think there was a lot of misunderstanding and misguidance from folks that are a little bit naive. But I will say this, one of the things that you can use AI for is to maybe put in the messaging that you're using, or where you are seeing some results. Are those messages, could they be crafted better from a different point of view? Could the numbers that you're analyzing be looked at in a different way in terms of generally acceptable numbers from other industry leaders that publish their information? I think I would be using that all day long to see what's happening. Am I normal? Am I out of bounds? I would start there. That would be my recommendation.
I feel like, Matt, and I'll get to you one second, like the king of terrible analogies here. It's almost like a sandwich of, I need to have good bread. And I'm the kind of,
you are hungry, aren't you, Robbie?
A little bit. I'm kind of the beginning and the end of the process of, I need to put in good inputs. I need to have this talk there. Then let it do the meat of the work. And then I need to do kind of this final check or polish, the bottom layer, to make sure that it's actually what I want. You can't just, you can't.
Yeah, you gotta, it's prompting, right? And again, there's people that have YouTube channels on how to build the best prompt, whatever AI agent you're using. I agree with that too. Like we got a whole community at masteryencompass.com, and we've got an AI agent in there. It's closed, and all it does is speak Encompass. And people are like, well, it doesn't help me. I'm like, well, you got to ask the right questions. And they're like, well, I don't know what question to ask. I'm like, well, all right, let's talk about that. And you'll get the results you're looking for.
You also need to do a little editing at the end. I can't tell you how many captions now I see with the rocket emoji or the M dash.
That's the best.
I'm
In
like,
M dash, yeah,
you
those
guys
are the
did not
best.
talk about those 2 years ago. Anyways, Matt, I didn't let you give you a chance to answer that first question about workflows and AI.
I'm just enjoying listening to you guys go back and forth. Honestly, I think it's hilarious because I do see those rocket emojis, and I'm like, guys, at least prompt the AI to not
All
put the
over.
emojis in. Don't make it so obvious in your LinkedIn posts, right?
Yeah.
I agree that AI, you get out of it what you put into it. So when you're talking about GPTs and stuff like that, the prompting is key. But on a broader scope, I'm very excited about it, Robbie. I'm looking at what we're doing with it. We're going to be having some exciting press announcements and press releases over the next month. We just strategically partnered with AWS and some of their providers to do the next generation of tech for big point of sale with our AI. And I think that each one of the point of sale providers in the market are going to have their own take on it. For me, I'm a little bit weary of anything consumer facing. Maybe it's that I'm a lender as well. And I think that consumer facing AI is where some of the biggest risk is, because an act of an AI is an act of the lender itself. To quote Director Chopra from last summer at the ICE experience in New York City, he kind of said that. I do think that there's a lot of states coming out with regulation on it. So where I'm focusing with our AI is more back-end efficiency. I 100% would agree with Larry said. AI is the best data aggregator you can ever have for your company. It can process your data faster than anything and give you reports faster. So feeding data in and having privatized data that's only accessible by your company, not accessible, closed AI, and having every action of the point of sale system, every time a borrower starts an application, finishes it, the questions they abandon on, what questions they fill out, their time frames, having all of that data feed into a private AI for our clients is going to be essential, because as a data intelligence engine, that's going to be able to give you unparalleled data. You'll be able to ask it, hey, what question on my initial application do most people drop off on? And it'll be able to pinpoint it across thousands of applications. And then you go eliminate the question, and now you just got less abandonment. You'll also see different forms of AI coming out. Like, we're going to be looking at a voice chat communication assistant, like a loan officer assistant that a loan officer just talks to, just like Siri, right? Stuff like that, where you're not actually doing actions anymore. You're just going to say to we call ours LOA, like LOA, right? Hey, LOA, go find the Jones file and update the pre-approval for me to 400,000 and send it to the real estate agent. And it's going to go and process those API calls, update those loan amounts, generate that letter, and spit it back to you for confirmation to go send it out. So I think of it as a big helper in automation and data. And at the end, I'm going to look at client facing. Once it's refined, once the loan officers, the processors, the back office has become super efficient, because that's where I think the lowest risk is.
Yeah, Matt, I'll ask you this question in general, and then we'll kind of hone in, Larry's response when it comes to POS, about what the modern originator is asking for from a technology standpoint. What's valuable? Retention of top originators is always a priority for people like yourself or other companies out there. It used to, a couple of years ago, and my dad and I talk about this at various times, to each other. It was, hey, check, here, take on this tech. And it was like all these tech options. And now companies are almost trying to figure out where they can pare back some of that. And what's the best ROI on the tech? How do I maximize it for what I have? How do we train people up? How, proper implementation and those sorts of things. So when you look at the modern originator, the modern top originator, what are they demanding from their companies? What when it comes to workflow? What do they need when it comes to tech? When it comes to the point of sale? What are the top originators really?
Well, I think you hit a spot on. We definitely went overboard in so much tech adoption that we almost overloaded them. And now there's a little bit of a reluctance when we introduce new stuff, because not everything we introduced always worked. And now they have a little bit of tech fatigue. And it's like, oh, another new thing I have to learn. I don't want to learn anything else. I'm very set in my ways. So there's a little bit of tech fatigue in the loan originator arena. But, a lot of loan originators, I believe, are looking for more ease of use, how to remove clicks in processes, How can I do more from my cell phone? How can I update my pre-approvals as fast as possible? How can I take an application as fast as possible? And how do I remove myself from the clerical aspects of origination? The loan officer maybe doesn't have an LOA. How do I get cleaner files up front? How do I run credit from my cell phone and run dual AUS? How do I get to decisioning? How can I get to guidelines faster? So I really believe that the originators that are tech savvy and are looking for more tech are looking for streamlined processes, less clicks, more automation, and easier, faster access to data.
Larry, then when it comes to the point of sale system specifically, kind of expectations of top originators or ways you're seeing people use it. My background with you is I've heard people think of Encompass as this clunky thing. You streamline it to where it's not slow upload times and that sort of thing. When it comes to POS, kind of expectations of the modern originator, and we'll get to consumers in a second, but from the originator perspective.
Yeah, well, it's important. I guess it's important for those that don't know. So, like I said, from 93 until 12, I was in retail. And so from 04 until 12, I ran other companies and ran my own company. So I was a consumer of Encompass, and I had to figure out the best way to run my business, because at the time, even though Encompass literally broke computers because it was so powerful for those machines, it was the best in the market because I could administer it myself. So, lying into what Matt said earlier, I could come in and I could make Encompass do stuff for me that other companies couldn't figure out how to do because I studied it. So on the POS side, the handle that's going on right now is trying to figure out, why do we need all this other distraction? David asked a question in chat, Robbie, whenever you want to take that.
Yep.
But the idea is when top producing loan officers talk about what do they want as far as technology, they want to have an easy way for their borrowers to apply. They want to know that their borrowers are getting asked for the right documents at the time that they're actually needed, and that they're easy to upload and return. And most importantly, they want to make sure the borrowers know what the heck is going on without having to contact the salesperson or the staff to find out what's going on. Like, nothing's changed in 30 years, nothing. It's still the same stuff from before. And so as far as the tech is concerned, there's different ways to answer that question, but all of this has to be pivotable. In other words, as the borrowers change, as the scenery changes, as companies change, you need to be able to have something that can move independently without restriction. And that needs to be something that is based on current standards. And so we kind of touched on this earlier, but software development kit versus API, the only thing that's happening in 2025 is API. If you've got any tech, no matter what you're on in this world as far as technology, if you're not using API, you're very behind. And that's apparent from the experience, it's apparent from the interactions, and it's apparent from the capabilities. So, when we walk in, for us, again, it's always workflow before tech. And so I ask, it's July. So this conversation probably came up at least 200 times this year in our workflow reviews. But the sales teams are bogged down by workflow processes where they don't know what's going on. They have to email their borrowers or text their borrowers for what's needed. They've got to reach out, and there's this crossover for when something was uploaded or when something was requested. And it's frustrating. It's really, really frustrating to all the salespeople. I get frustrated as a salesperson when I can't figure out what's going on with my deals. And so, to Matt's credit, he scratched his own itch. He built this thing, Big POS, and that works great. I don't always have an opportunity to get our clients to change their tech. Like, some of these folks have contracts and they're locked in, or they've got budgets and they've got to meet. So they might use Consumer Connect, or any other platform. But the idea is whatever it is that we're using, we've got to make sure that we leverage the heck out of it and get the workflow first, figure out what the system can do, and get the wants to match what's possible, and then move on.
It's really, Robbie, about a system that's rigid versus a system that's flexible. And that's going to be the biggest differentiator between old point of sale technology and the new kids on the block, the new point of sale technology. A lot of the older technology and legacy systems in the marketplace, from what we see, they're very rigid. They were built on the SDK. They've been maintained phenomenally over the past couple of years, but the market needs of 10 years ago are different from the market needs of today. And as each company, what I mean by each lender as a client, goes and looks at how they want their workflows automated, what they want their customer experience to be, it's going to 100% depend on what Larry's saying. How dynamic is your front end system and how malleable is it? It's the difference between configuration and customization. Customization is, I need custom code. I need to go back and fill out an SOW, spend more money to go re-customize this platform, versus what Larry's talking about is, does the system allow for configuration? The highest level of configuration where you don't need a developer, where your system admin can go change the questions, change the tasks, change when they're deployed. And I do believe that the systems that are going to win are going to be the ones that are highly configurable without the need to incorporate a developer.
I've heard that in my discussions with people, throughout the industry, that customizability is great, but it costs an arm and a leg, and it's this huge process. Configurability is going to win out. So it sounds like that's what you're saying. David, I appreciate your question. And actually, earlier in this show, when I mentioned bringing things forward in the underwriting process, I think David's working on a project to kind of get underwriting at the point of search, which I think is really, really valuable. It could be the future more. So Larry, maybe, I'll connect you guys after probably. I also, David, I'm going to scold you because I guess I'm not doing a good enough job as a moderator. If you're asking these questions, I will ask your questions. They're excellent questions. We'll go one by one here. Matt, when we think about like a very configurable system, we've talked about it, kind of what it means for an originator, but from the borrower experience, what is the expectation of a modern borrower, a potential borrower that's a millennial or Gen Z? What do they expect from the experience, and what does a highly configurable POS or workflow look like for them?
Well, for Robbie, when you think about it, it's not just about the young generation, it's about the older generation as well. Because right now in the market, perceivably for the next 10 years, we're going to have one of the most interesting periods of time, because you still have baby boomers in the market, whether they're selling or buying their end-of-life house. You have Gen Xers, you have Millennials, you have Gen Z, and now you're going to have Gen Alpha, and all of them are going to be in the market at the same time. And each one of them may expect a different type of experience. So for me, it's about how that landing page that the loan officer has, that he sends that customer to. I'm not going to have one landing page for a millennial and one landing page for a Gen Xer. I have to offer all of these experiences on the same landing page and give consumer choice and actually ask them, how do you want to interact? Do you want to call me? Do you want to come in and schedule an appointment? Do you want to do an application in under 5 minutes? Do you want to do a full self pre-approval? Because a lot of the younger generation, they want to be in control. So to answer David's question, the way I look at it is, the youngest generation, they feel they can do it themselves and they want to be in the driver's seat. And because they want that, how much can you allow them to do to originate their own loan? Because they're going to feel like they're in power.
We'll have a completely separate discussion on where Gen Z or Gen Alpha is going to get money to buy houses in this environment. That's a totally different thing. But I would think, and I've postulated this recently. We thought with the NAR settlement, basically about a year ago, maybe 13 months ago, that it might lead to these a la carte services. And there's all this talk now about how do we, we're paying originators too much money. And my thought would be, let people come in, and based on the configurability of experience they want, do you want to breeze through the process because you've done this 4 times before? Or is this your first time buying a home and you're scared and you want someone to hold your hand? All right, figure out what level of service you want, and you're going to pay for it in an a la carte type of manner. Maybe like the loan officer will go the way of what we thought the real estate agents were. Matt, you look like you're itching to either or to debate that, but that's kind of.
I do not think that we're paying originators too much money. I'm adamantly against that. I don't think they're making enough money. The way I look at this is that loan officers need to use technology to go in and actually. I don't want my loan officer going and sitting down clicking buttons. I want my back office doing that. I want my loan officer going and shaking the tree and going out there and getting as many deals as possible and generating as many referrals as possible. I want them setting up with real estate agents with technology to go capture every data point necessary. And I want them to make 10 times more, because me as a company owner, the more they make, the more the company is stronger. So I don't think that it's about that. I think it's about creating more efficiencies for those loan officers so they can maintain their compensation levels. There's a lot of other places we can cut other than NLO comp.
That's an excellent pitch for going to work for Absolute Home Mortgage Corporation. Yeah, people go check out the website. Don't forget our Wave. Go check them out too. Larry, you want to add something?
Yeah, I was just going to add, I've my perspective on this has always been education. Even when I was in sales, I was always the go-to guy out in the street, because I always knew more than the next person, and I took the time to explain what's going on. So, I think to David's question, how does a POS experience need to change? I actually want POSs to become more comprehensive. We don't need the POS to be educational, but I think we do need to have a higher stickiness to it, to have a reason to go back than just the application or just the status or just the document. I really want that to be a point of entry between the client and the company, because that's honestly, if we roll the clock back, when we started with CRMs, which is what we always had, and then POS came out of nowhere, and it's like, oh, well, it'll be easier for the borrower to apply through an app instead of a website, and you'll gain all this control. But I have yet to see POSs take that next step and create a community of experience to where the borrowers can actually feel like they're part of the conversation. Because I don't have these numbers, but anecdotally, I know that there's a longer period of time than ever now for a person to be alive versus when they become a first-time homeowner. And that takes a lot of expertise and a lot of trust and guidance. And I think the companies that engage with a POS that keeps that borrower sticky to them as a company, as a source of information and trust, I think those are the companies that are going to win.
I will butcher the statistics for you. I think the average age of a first-time home buyer 10 years ago was something like 32 or 32 and a half. And now it's shot up to like 36, 37, 38 on average, which is a crazy
numbers for me.
Crazy.
And all that time, they're on Reddit, they're on Google, they're in chat, whatever the heck they're doing to gather their information. I still get people telling me stuff that I'm like, where the hell did you hear that from? And it's because they did their own search with their own prompts. And so if I went back and opened up, a mortgage company, that's what I would want out of my upfront experience. I'd want a community-based POS that gives me all the stuff that we've been talking about, but then also interlaces that comprehensive engagement, both before the transaction, during, as well as after.
Yeah, Matt,
I think that's where the money is.
I love what you said about, I want my salespeople to be the ones out there educating, and that's rather than pushing buttons. Let the back office do that. Let AI do that. And that's kind of what I was saying about level up this hierarchy of needs. Like, free yourself up from some of the mundane to get towards other tasks. Let's go to David's middle question here. For a while, it was all these companies, a lot of companies touting, my tech can do this, my tech can do this, and it couldn't. It was some of it was smoke and mirrors, some of it was a backroom staff and offshore somewhere. Some of it just wasn't true, and the thought would be, well, we'll make up for it in some way to give our
if you buy it, we'll make it work at that point.
Yeah, exactly. And so I would like to think that AI evolves so rapidly and has been evolving rapidly to where there's a little bit less of that mismatch. Sure, I'm sure it still exists, but Larry, let's start with you here. Kind of the gaps between expectations and tech capabilities. Where are we at with what tech can actually offer versus what is claimed versus what borrowers are expecting?
I don't know. It's such a hard target because, again, like, we service national IMBs and local credit unions, right? Just take those two cohorts of salespeople. The local credit union is serving members that they could run into in the grocery store. The national IMB is just looking for numbers. Like, how do you satisfy tech to those two cohorts? And I think the reality is tech right now is lagging in that it's not, I'm going to use your word that you said before, Matt, but it's not configurable. When people would come to me and say, I got into a flame war earlier this year, last month or something, on LinkedIn about Matt's post, like, what's the best LOS? It was like, you got 10 million views or something on that, Matt, and like 1,000 comments. And I'm like, give me the name of any LOS that is better. And what I was looking for was the ability where I could sit at my laptop and I could make that platform do anything that I want to satisfy the business needs. There's no other platform that can do that. So, what I would say is when I get into a POS, I need to be not restricted from what the business needs to have. And Big POS is one of those things where I can go in there myself right now and configure it to all end. I can do the same thing mostly with Consumer Connect, but there are limitations between those two platforms. Just like I can do the same thing with others, but where do the boundaries end for what I'm allowed to be able to do to get my business where I want it to get? I think that's where the gap truly exists, is there's a disparate difference between different platforms and what the configurations allow and what technologies they're built on. And I think that's where some POSs have to get their act together and move forward.
I'll take a more surface level approach to that conversation, and I'll go to the talking heads that we see on LinkedIn that, Robbie, I know you love so much. But this AI conversation drives me nuts a little bit, because like I'll put a post up and we'll talk about something. I'll see somebody comment, oh, AI is going to fix that. AI is not going to program these systems entirely right now. Okay. You need, like, our developers, we use AI every single day, but it's like inline code. It's cleaning up your code one line at a time. You're not going to go prompt AI, go build me a point of sale integration on Encompass's API, and it's going to spit out that code. That's not how it works. Maybe one day it'll get to that. But right now, that is, for me, the biggest gap between expectation and capability, is thinking that you just have AI can prompt it to go do this stuff. Now, it can teach you. You can ask AI, hey, how do I go write an Encompass integration and do a Postman collection? And it'll teach you, this is how you go get the Postman collection. This is how you go step by step to go write the integration. But you still need to compile it, assemble it, put it into GitHub, and put it into these code releases. There's so much more to it. So to Robbie, I was taking the angle of, AI, and everybody saying AI is going to fix a lot of this stuff. I think in the future it'll have a lot more capabilities, but as we sit right now, you need a good, knowledgeable human component sitting in between what our expectation of what this stuff can do and what it can actually do.
Well, thank you for making my host job easy, because that's David's third question. That's probably where we'll end it. I think the one thing that we didn't touch on today, and maybe I'll just mention it briefly, would be, there's a huge play right now for retention or referral business, those sorts of things, retaining customers.
Yeah.
And people that listen to the regular stuff I put out will know that when I was at SoFi, it was student loan first, then personal loan, then mortgage, then let's get into wealth products. How do we get a customer for the length of their life cycle? And depositories have an inherent advantage with being able to offer various products over an independent mortgage bank. But we're seeing, with stuff that the two biggest lenders in the nation have done in terms of acquisitions this year, that play for retention is huge. And you would think that the upfront customer experience that we're talking about today plays into this. Matt, you can touch on that, sure, but also, kind of the human layer in between, how they evolve and adapt with these shifting pieces to maximize their benefit to the borrower.
For me, if you're talking about customer, like end user mortgage client retention for an IMB, it's about data. It's about how well your system's connected to your CRM, how many after closing touch points, and how accessible you make customers your data, how it's tied into point of sale. So you think about these touch points, like when the 1098 goes out, are you just mailing out a 1098? Or are you sending them back into the portal? You think about when a customer has to do their taxes. Are you going and saying, hey, don't forget, you can go back to the portal and grab this convenient information on your mortgage, and using your CRM to go and constantly remind them, we're your lender, you have this portal, and this portal has resources. And going and recycling every time we see different fluctuations in interest rates. Hey, go use your mortgage calculator. Go watch summertime's coming, thinking about buying a beach house. Go use our flexible mortgage calculator. Because unfortunately, Robbie, there's nothing cool about a mortgage company. People do not have brand loyalty to mortgage companies like they do to sneakers. Okay. And we need to figure out better ways to stay in front of them consistently to remind them we're your mortgage guy. Right. We don't got the Nike swoop. All right. We got the absolute A, but nobody cares. Right. Nobody cares. So other than the old school method of the loan officer staying in front with relationship management, we need to use these portals to stay in front of these audiences.
Very well put. Larry, I'll give you last word here because we're a minute from time.
Sure. So I'm biased, right? I'm an old guy in an old industry, and I think the loan officer role, as far as adapting to this POS tech, they've got to decide what they want to leverage. Similar to what Matt was talking about, it really does vary. And so when we look at different companies and what works and what doesn't, I've got a loan officer who's selling a deal to a borrower and how they plan on staying in touch. Some loan officers default to wanting to email, wanting to text. And it doesn't matter what the POS can do. That's just what they want to do because that's how they stay in front of that borrower with that relationship. So I would say that my best answer is the better question for Dave, if I could put words in David's mouth, change the question would be, how does the company need to make sure the LO role aligns with their POS and their workflow? I think that's a valuable question that needs to be reviewed quarterly at the very least, or annually at the very least and quarterly at the very most, just to make sure there is an alignment.
Very good point. Good last words. You're not an old guy today, Larry. You're a millennial.
I'm very old. I'm a grandfather. I got my little grandbaby, Aiden Charles. He's a month old. So
you're not helping me out here. I sent you a yee haircut wig in the mail from Amazon, but I guess it didn't get there in time.
Did not get there.
But I thought you had excellent insights, Matt. You as well. Always a pleasure talking to you. Big thank you to Tidal Wave for sponsoring today's show. Check them out, tidalwave.ai, and we will see everybody next month. Kristen will be back. Guys, thank you very much.
Thanks, Robbie.
Thanks, Robbie. Thanks, Matt. See you, everybody. Thanks for coming.